Great. Fantastic. All right. Welcome to another Rocket Dollar webinar. I'm
Thank
Nick
you.
Gonzaga. I am one of the sales representatives. We have James Reed here with us. He's going to tell us what's going on in the institutional world of self-storage. And just so everybody knows right off the bat, we are recording this. And if I can put a little note in the chat to everybody, I will let you know that it will be available within 24 hours on the Rocket Dollar YouTube channel. So take it away, James. Tell us what's going on. Give us a little intro.
No, absolutely. Just a quick background. We all, I think all of us may know a little bit about storage, but I think we all find storage in a different way. Just a quick feedback. I actually had a business and house in here in the Midwest in St. Louis that actually burnt down to the ground overnight. And I found myself storing my stuff in a storage facility and realized how you can help people with self-storage. And then I also realized, wow, there's a lot of good money in this industry. So I actually found the industry from a disaster that we had where I lost my business and my house all in one night. So that kickstarted my research and development to be full-time self-storage. So that's kind of my quick backstory of how I found storage. But we could definitely dive in a little bit more with the investments in self-storage, but that's the backstory.
That is quite the Phoenix type story, man. Very interesting. Okay, yeah. Let's take a look. Do you have slides? Let's take a look.
Yeah, absolutely. Let me pull this up for us real quick here. So, just a little bit about where I'm James Reed with the Investa Group. And we specialize in self-storage. That's what our main focus is. It's an asset class that we believe in. There's a lot of ways to gain revenue and different investments off that. So, and the goal here too, for everybody on the call, I'm really big on Q&A. So I'm looking forward to answering a lot of questions towards the end of the call. I know there's a lot of opportunities for all of us to be involved with these investments. So definitely looking to answer some questions. So I believe Nick, they could probably type some questions in the chat, and we can also have an open Q&A at the end. Is that correct?
Yep, and we got the Q&A tool. Please use the Q&A tool just to make sure we can keep them organized and answer all your questions. A chat for anything more casual. Thank you.
Fantastic. And same thing with our first page here. We try to keep it really simple to invest with us. I don't think anybody wants to click all these buttons and fill out these documents. I think we try to keep a very streamlined process to be involved and work with our team. So we try to do our best to keep everything streamlined. Just confidential disclosure, your normal PowerPoint perspectives. And then we have just about Investa Group. We offer self-storage investments. What's unique about us is that we're vertically integrated. We both have the investment firm. We have our management firm, that our store co-brand that we manage the stores. And we also have a construction team that we're able to go out there and do add-ons and new construction. So we really try to take advantage of the possibility of growing wealth within our industry. And at the end of the day, we're held accountable. We're doing the management, we're doing the construction. We want to take ownership of what we're trying to accomplish. And I think that our investors really like seeing our developments and what we're doing to keep in communication with everyone with our investment opportunities. Just key things here is just, self-storage. We're trying to do larger projects, so over 40,000 square feet, where we can have a publicly traded company come in and buy our assets. If we go to sell these assets, and sometimes we refi, but a lot of our properties are much larger properties to bring in the larger players when it comes to the sell approach to our self-storage. And this is just some of the targeted returns. So when you're looking at different asset classes, we all have many choices to invest. And I believe that self-storage is one of the most, I guess, I call it the recession asset, resilience to recession. Because if you think about it, self-storage works in both in a down economy and an up economy. And as we go into this uncertainty in our marketplace, we provide a great place to invest with our market. So you can see with our different targeted returns with your investments. Just different approaches. We talked about the cash flow they have on self-storage. When you're investing with us, we just are able to diversify across our platform of our different assets. And you think about it, a facility may have 500 to 1,000 units, where certain assets, you only have a couple different doors, Where storage, we have a large volume of product that we're able to give to our customers. So we're able to reduce some of that risk, where when you're with only a couple doors, if you lose a couple tenants, you might lose half of your tenants if you only have a couple doors with a different asset class. So very thankful for the industry when that comes to that perspective to kind of work through that. And definitely the tax benefits. So when we're talking about investing, you are also part of the LLC, where you're able to receive certain tax benefits from your depreciation to your K1s. So it's another great opportunity to have that possibility too for you. Of course, why self-storage? I think the big thing that we talked about is the passive investment, where self-storage, has a great return on investment historically. Even through the 2008 crisis that we had, it just continued to perform for us. I do have a couple of charts here. So 1 in 10 in America's rent a unit, which is great. The average national occupancy is 93%. It's low maintenance. We're talking about metal buildings, very low payroll employees that have to be at the physical site. And we're talking about a $40 million industry, a $40 billion industry that's not going anywhere. As you all know, we all like our stuff, and there's a lot of movement. You don't see a lot of people live in their own house for 30 years anymore. I think the average move is, about 7 times a year, or 7 times in a lifetime someone moves, and they're going to need that storage during that time. It's just one aspect. As you all know, here's some just really quick performances. We have the self-storage, multifamily, industrial. As you read down this list, you can see how much has changed since COVID-19. And as you all remember going through this, everybody brought all their students home. So now your spare bedroom is a schoolhouse. You're working from home now. So now your spare bedroom is your office. You got to move all your stuff somewhere, and it's storage. And on top of that, now that we're doing a remote work session, people are now moving across the country a lot more. They need a place to store their stuff. So COVID really helped our industry. From a technology aspect, where we're not needing to meet people on site anymore, to everybody's now using their storage for multiple reasons for now. So it's been a great asset class during that time. And this is just some of the total returns during COVID-19. You can see self-storage industry and other areas that had a loss based on the asset class. And then, our big market is we're looking at more of your larger to mid-term markets. That way we have job growth. We're always looking at about the job growth. We're looking at occupancy at the store level, and also positive on the growth of population in the area. So there's many metrics that we look at. So when we're looking to develop or buy, there's many items that we're looking at to make sure that this is a fulfilled asset that we want to have and bring to our investor base. Just a couple things here. So we talked about the in-house management. We're huge on that. I think as you think about it, no one cares about their product more than yourself. So we've developed our own in-house management company to make sure that we're managing every store to the highest ability, because we have expectations that we want to meet for our investors and for ourselves. We also focus on automation. We have a lot of our facilities have the Noki system, where we're able to lock and unlock units from afar, just to save time and labor. And just having the team on ground, we kind of know the ins and outs of every store with that perspective. We talked about the property management. The other thing that we talked about is the development. So we develop our facilities and we manage them. As you all know, construction costs over the last couple of years have been very extreme. Sometimes you ask yourself, is that really the real cost? And you don't know, because you're getting bids from other contractors. Well, we know the real cost, because that's what we're paying for. And we're able to provide value to our investors because we're able to build and have a lower cost basis in each project than we would with hiring another firm. And again, it comes down to accountability, keeping ourselves accountable to our construction. And we're here to build it the right way, because we're more of we want to build it right for our investors and for ourselves. And we know that the larger REITs are wanting quality in the building perspective. So fully integrated. This is just a quick perspective. So as you all know, a lot of retail box stores are going out. So we've been focusing a lot on conversions. This actually used to be a trampoline park. that we converted. So when we go to buy these, we convert them. We also sell out the out partials. So you'll have an out partial that we can sell and then bring additional revenue to our investors. So there's many opportunities when we're looking at conversions. This happened to be a 40,000 square foot building that we converted into 80,000, about 700 units. This is just a quick photos where we're taking the interior of the facility, building a second floor, for our conversions. So that's another great opportunity. Just another quick overview of the layout. This just kind of goes more into some of the our fees as a sponsor with the property management, asset management perspective. So through our partnership with our investors, there is fees associated with our side to make sure that we keep everything moving forward and accountable for our side. Couple of the things I want to just go back real quick too. So I know there's a couple, let's see here. So when we're looking at different steps in this process, we look at 3 different aspects. We have the existing facilities where we're taking mom and pops and we are adding technology to them. Just the word mom and pop to an institutional asset now, where we're bringing technology in, we're rebranding it to Storco Storage. We have the conversions that we talked about. And then the new development. We actually have a development going on right now. We have a conversion going on right now. There's always something that we have in the pipeline for our investors. So if you're at a point where you're ready to invest, we're ready for you. If you need some more time, there's always an opportunity for you to work with our team. And we keep it super simple. You can see here on the next steps, we have a PPM. We walk you through each step, subscription and questions. And then I definitely this is another perspective. We just ask that you send us an email or go online is probably the best option and fill out our form, just a quick form looking for more information. We will follow up and send you all the documents. And then I also want to make sure that we gave plenty of room for question and answers, Nick and Brandon. I wanted to leave this slide up for a moment. If there's something either on our line, our website, or you can email me direct at james@theinvestorgroup.com. But looking forward to connecting. I know there's probably, you guys may have some questions for me too. My main point is just want to kind of high level, but we could definitely dive deeper in any of these aspects for your audience and for the opportunities.
That's great.
Yeah.
Thanks a lot, James. That was a lot to go over in a short amount of time.
Absolutely.
So I guess what type of investor would be looking for self-storage? Is there a specific type of investor, or can anybody?
Yeah, we work with many different investors. I think that the biggest thing that what's helpful with self-storage or with investors, like you actually have a physical place. You get to pick where you want to invest. It's not like the stocks where you put your money out there and you hope something happens. You can actually pick your sponsor. You could pick the companies that you are wanting to invest in. And with us, we're just vertically integrated. So we have the management, we have the construction, we have the platform. So, but I would say it's really open to many investors, both accredited and non-accredited and accredited investors. We have different asset classes to help them reach their goals.
Okay, great. So we're going to get a little bit into the meat of what you were talking about.
Yeah.
So would this be considered more of a recession-proof type investment, or are there still aspects that could come up? What should investors be?
Yeah, well, so what's nice about self-storage is that we're on a month-to-month lease with our tenants. So as things change in the market, we could change in the market immediately. So we were able to send out a rate increase and raise rents to help offset any additional expenses during that time. So when we're talking about inflation, that we're able to continue to raise rents, and no one's going to move out for a $20 increase, but you take $20 times your thousands of units that we have across the board, we're able to fight against inflation because we're able to raise rents monthly in that perspective. So that's just one example, but there's a lot of value in the ability to raise rents. And that's what we do. We can maybe be 93% occupied or even 85% and just continue to raise rents. And as you know, all of us, America, we're not going to move out for $20. So we're able to really fight against that by raising rents.
Yeah, unlikely to do that. So one thing that I did like is that you have the in-house property management, right? So what a lot of IRA or retirement account investors will need to be mindful of is if they do their own property, they're going to be getting a lot of them are used to getting their hands dirty and that's just not allowed in a retirement investment.
Yeah.
So having you as more of a stopgap between the investor, this is definitely more of a passive investment, right?
Absolutely. So we have LPs in our deal, so limited partnerships, and you bring up a great point. This asset you can come visit. You're not going to be involved with like the day-to-day, of course, but it's passive. But like it is an asset that you can actually see and visit. And we have an audio podcast every Tuesday at 9 Central that we're educating our industry. So as when you're looking at a sponsor, it's really important to make sure that you find the right fit for you, because not every sponsor is created equally. And we thrive ourselves on open communication, good, bad, and ugly. We want to talk with our investors. We have a monthly newsletter that goes out explaining what's happening at the stores, because there's a lot of options out there. And I
Right.
think that it's very important to find the right sponsor to make sure that they're fulfilling your investment opportunity.
Great. That's great. So we did get a question in our little question and answer chat. Thank you, Guy, for sending that over. So I'll read it out loud. He wants to know number of units in what states, regions, size of units. And then since he's from Minnesota, most storage would include options for house or options to hold the cars or boats. And are your units any different?
No, I appreciate that. So we have a lot of ours is driven more towards the climate controlled facilities. As an industry and as a nation, there's been a big shift of everybody wanting more climate controlled facilities. So a lot of ours is driven towards market driven units. So in the markets that we're in here in the Midwest, we have a lot more climate controlled facilities. We do provide boat and RV, as you know, that during COVID, everybody went out and bought boats and RVs. And so we're actually having expansion on one of our deals right now that we're doing more boat and RV storage.
No.
But we provide space for businesses too. With our conversions, we maximize every square footage. But I would say majority of our units are here in the Midwest. And we're a lot of climate controlled facilities.
Okay, great. So I do kind of want to get into a little bit about the fees, because you mentioned because there was two sets. One was it looked like service fees, and then another one, right? Yeah, pop that up real
I'll
quick.
run that down for us. Absolutely.
So just trying to get an idea of when somebody invests in one of these.
Yeah, absolutely. So you have the sponsor fees, so like the acquisition, so us going out and actually physically finding this property. And some of these properties may take many years to lock down and close on. So that helps provide fees or revenue to go out and search for properties. When we're going out and managing and constructing these facilities, we're only asking for a 6% fee to manage the entire process to make sure that everything's done correctly on time and really on budget. We're super tied to every single project. So we're trying to get it under budget and also open as soon as we can to start generating revenue. And we're just trying to be fair. As any business, we want to continue to be transparent. And that's why we share it on this slide. We're not trying to hide anything. When we go to refi, there's a fee there because it takes a lot of paperwork to make that refi happen. And on the property management side, I think this is actually maybe a little bit on the lower end. I think some properties are 6 to 8% property management. We're only asking for 6% to manage the asset, and then 1% on the asset management. So we're full transparent throughout the company of what our fee structure is. And I'm glad, Nick, you brought that up because you want to know everything that's involved with the project. I know there's a lot of, how do I say this? A lot of promises being made out there. And I think that it's super important to understand your sponsor and make sure that one, you trust them and it's within your asset class, and I think that we have a great asset class and there's many out there. I think there's just storage to me just has a lot of flexibility to, lend itself to work in at multiple different stages of the economy.
Right. And it looks like it says it's paid once. Is it an upfront cost or is it more of an ongoing?
Your fees are just are one time. Your services, that's an ongoing yearly process. So typically the fees are going to be a one-time expense, and then your services, that's an ongoing management and servicing of that investment.
Gotcha. Okay, that makes sense. And so we're getting a few more questions coming through.
Absolutely.
Follow-up question from Guy: investors investing in one unit, or is it a fund across a lot of different units?
And no, great question. So historically, we've done individual projects. We are working with our SEC attorneys to work on a general fund. As of right now, we've been raising per project, but we're going to be having a fund here shortly.
Oh, that'd be cool.
Absolutely.
So is it a method of buying shares when somebody goes and invests, or is it different?
Yeah, they are buying. They're buying shares, and those shares will equal into a percentage of that investment opportunity.
Okay, great. Now, another question, and thank you, Joe, for that question that we just asked. Savandera, sorry if I didn't do that right, wants to know, how is the risk management handled?
Could she go in a little more detail what she mean by risk management, on which level, or?
The way that I would, I guess, assess the question is like investment selection process. What do you take into account so that you do have risks that are mitigated, right? So when you go and purchase an exchange traded security, you have to go into a lot of different things when you select a security, whether it's a bond, ETF, mutual fund, or stock. So obviously this is going to be very different.
Yes, absolutely. No, that's a great question. I appreciate you clarifying that for me too, Nick. So I think one thing is that the selection of our investments are properties, right? So they're self-storage, their development, their conversion. We're buying a mom and pop. I think this slide maybe give a really good perspective on, the strong job growth, the positive population growth, your net income, average household income. So there's a lot of different matrix that we follow, because there's a lot of movement around the country where people are moving to, and we want to be able to place where it's a stable economy in the sense of growth. So if we're looking at maybe call it 30 matrix in a market, and maybe 10 of those get hurt at some point, we still have 20 strong matrix that we've been following that we can rely on. So it's very important for us to do our back work on finding the right property. So that way, when things do turn, we still have very strong fundamentals for each project that we're investing in.
Great. That makes a lot of sense. Appreciate that. And
No,
and that was what they were looking at. So
yeah.
Another question, and this is, I guess, in between both of us. Do we have investors who are using the IRA, and how does that work? And our own Brendan has purchased self-storage in his Rocket Dollar account.
Well,
James, on the other hand, does not have a Rocket Dollar account yet.
Yeah, well,
Go ahead, Brendan.
I wish I purchased it through a Rocket Dollar account, because the investment did really well. It exited earlier than intended around the Austin area, and the tax bill was awful and even higher than I expected. So,
I thought you did that with your Rocket Dollar account. Next time. But we do have investors in our platform that are making these types of investments, and so there's two different ways to do it. If you give us a call, we can explain our different products. But essentially, what you're going to be doing is opening a Rocket Dollar account, and then moving over some old 401k money and using that or any other retirement account money to invest with Investa Group, right? And these are typically what would you say, James? 5 to 7 years holding.
Yeah, I would say on average, probably more 4 to 6 years is on our average holds. And you bring up a good point too, Nick, is that, they kind of control where they want to place this money. Mm-hmm. And I think that's what's great about your platform, is that they can kind of direct kind of their future of their investments. And I keep going back to the sponsor, but it is important to find the right sponsor that can help grow their revenue, grow their investments in a very good, stable asset.
Great. And by the way, it is going to be still in an individual retirement account, right? Or solo K if you have solo K, but there's not going to be taxes on the investment in an IRA until you take money out. So whenever you do a distribution, that's when you can expect to have a tax consequence. One thing I do want to tie into that is you mentioned something about the depreciation on the K1 reporting.
Yes.
I'm not sure, would that also be tied in with a retirement account as well?
I think, is that question to me, Nick? I believe.
Yeah, it is.
Yeah. So it's going to flow through a K1. So like during initially when we do a construction project, we have a lot of cost bases in the project. Mm-hmm. So that depreciation is then shared down to the K1. So it could be treated as a loss. So it also help lighten maybe potentially their tax burden on their initial tax bracket, because it's considered a loss because we're depreciating that asset. So
Mhm.
it should flow to a K1. How their tax assessment or a tax advisory works, that's individually, but it's just another added bonus that you're able to get a depreciation.
Yeah,
Mhm.
and
I was just curious.
with the K1, an IRA investor would kind of ignore that and just file it in a nice place so that they have a record of it. You don't want to just toss in the trash so that, you know, they're accessible if you ever did, God forbid, get audited. With the depreciation, all those nice benefits, you're unfortunately passing on those in the IRA.
Mhm.
And what you're gaining is, you know, that tax-free capital gain protection. So you're really not paying any taxes, but you
Mhm.
also kind of lose a few write-offs as well.
Nope,
That's
that
kind of
makes
what I
sense.
thought.
Pretty good.
Is there a minimum investment for Investa?
Yeah.
Also, are there accredited investors only?
Yeah, no, great question. So one is our minimum is 50,000, and we do have investments opportunities for both accredited and non-accredited, Nick.
Oh, that's fantastic.
Yep.
Okay, great. Well, that's good to know. And another question from Guy. He was wondering about historical returns. Expected returns is not really something you can get into, I think, on a webinar. And then he asked about a payout schedule.
Yeah, so we let me go back to this slide real quick here. So this is our target, of course, with our investments. Typically, so when you're involved with one of our projects, we pay out during our cash flow. If anytime we have an equity distribution, let's say that we sell one of our out partials, our investors are tied to that sale of that part of the property, and then we typically do quarterly payouts, if that's another question you had about timing. But they're tied both to the cash flow of the property and the exiting or the refi aspect of each project.
Okay, great. Expected returns, would you be able to comment on that?
Yeah, so so this slide right here, we're trying to share. Let me go back here for us. So every investor looks at different things. So we have the cash on cash returns example, that 15 to 20, cash flow annual about 5 to 8%, and then the leverage inter rate of return is roughly about 13 to 18%. And then when you're looking at a multiple, you know, you put in, call it $100,000. You know, our approach is 1.7 to 2.2 multiple. So that's our approach historically on our
Gotcha.
plans for our investors.
That makes sense. Would that be on an exit on the multiplier?
Yeah, so that's going to be your full. So like if you look at the lifespan of your investment with us during the whole life and the exiting of that asset, you're looking at a total about 1.7 to 2.2 equity multiple.
Okay, cool.
Yep.
Great. Thanks for going over that.
No, absolutely.
Let's see. It looks like question and answer is a little bit dried up now. Is there anything else you'd like to add?
We covered a lot. I wanted to leave a lot of room for questions and answers because I think everybody has a different perspective. So we may have some more questions that come up. I think at the end of the day, I think that we talked about the sponsorship, you know, finding the right sponsor, getting behind the right company. A little bit more about self-storage is just, you know, it's just with the asset class, it's a growing asset class. And you have publicly traded companies out there buying assets. You have mom and pops that are running it. So our goal is to continue to buy those mom and pops to make them more institutional grade properties. And then on the construction side, we have the ability to go out and perform work. Overall, it's just again another great asset class. I think anybody could talk great about their asset class, but what it really comes down to is just the numbers.
Mhm.
You know, we have about maybe 8 different asset classes here, and historically, self-storage has outperformed every single asset class out there. And I think a lot of it's got to do with all the flexibility that this class has to offer, both to the sponsors and to the investors to leverage the risk and the reward with self-storage.
Got it. So another question I wanted to throw at you. Probably the biggest concern is about finding a location, right? It's probably the main concern. When you guys select the location, what kind of city or town would you be looking to purchase this?
Yeah, very good question. I I don't like using ever the word depends, but I think the biggest thing for us is what is the matrix telling us? Do we have a growth in income? What is our average household income? What type of job growth there is?
Hmm.
Where is the migration happening within the city? Especially when it comes to development, you want to make sure that you find the location. I look at it as like building a moat around your facility. How do I place myself in the market where it'd be very hard or difficult for somebody else to reproduce what I'm having?
Mm.
That's why we like the challenging sites, because we're resilient. We want to go out and find the hard places to build where we know someone else can't build very easily, or
Hmm.
better yet, communities where it's very hard to break into. We have a great team behind us. You may be seeing me today, but there's a full staff behind me. We have many subcontractors that we work with the real estate attorneys and cities all across to make sure that these projects are successful. So they may just be seeing me today on this call, but it would take hours to introduce everybody that's part of our team. And that's what we're after. We're specialized in self-storage because we believe in the asset and we want to be focused. As you all know, water can cut through metal if you're focused enough. So I believe it's super important to find a sponsor that's in the day-to-day. And that's why we've opened up our management company, our construction company, just being fully integrated and taking responsibility of these assets.
I was muted. Sorry. I like
No,
the
it's
idea
all
of having
good.
that boat analogy. Um, Another question from Guy: How many properties does Investa have now?
Yeah, so we have about 1,300 units between our two open stores and the other three that we have under contract. One's a conversion, one is and two are new development properties. So we're starting raising funds for the one that we're about to close on. So it's been a great opportunity.
Okay, great. Just saw another one pop up real quick. Oh, personal question from Joe. James, where are you investing your retirement funds?
Yep. So earlier in this call, I'm part of a storage mastermind group. So we meet quarterly and we all kind of invest in each other's deals because I go back to the sponsor. When you trust the sponsor, you want to start to invest in. So all of my investments have been both with our other investors, but also
Mm,
I have money in every deal. So every deal that you see out there, I'm tied to that personally, because I believe in it and I want to show my skin in the game. So, and again, I think all of us believe in what we do, and I believe in self storage and what it can provide for my team, my family, and our staff and our investors.
Oh, it's always nice when somebody's eating their own home cooking, man. That's good. Good to know.
Yeah.
Okay, so that's really it. It looks like for question and answer. If there's anybody else that wants to throw something to James or to me and Brendan, we'd be happy to field it. Otherwise, James, why don't you put some information in our chat that we could get a hold of you or in the Q&A,
Yep, I sure
or
will.
it's on the slide. Okay,
It is, but I could still put it in.
okay.
Let's see here, this chat real quick
I
for
can
us.
type it for you. That's
Yeah, that would be great. Yeah, if there's more questions that the investors may have down the road, I would say the best thing is to visit our site, theinvestorgroup.com, and we just need just a little information. You can be part of our investor list. So as investments come up and available, you'll be the first ones to know about it. So, and we also have newsletters regarding our different assets. So I would say if there's any interest, please go to our website, click on the to be added to our investor list, and we'll be glad to keep you posted. And we don't send emails out every day. This is just strictly investment opportunities that we want to be able to share with you before they get fully vested. So that'd probably be the best way to be involved with our deals. And then they can always reach out to me through my email with more questions. But like I said, again, I definitely appreciate the opportunity here, and there's a lot to learn from. And as I mentioned earlier, I have a weekly audio podcast on Clubhouse called the
Mhm.
Self Storage Clubhouse. So as the investor wants to kind of maybe get to know me more as a sponsor, I'm live every Tuesday. You can ask any questions, learn more about the storage industry. But at the end of the day, we provide great institutional investments passively for our investors. we keep it simple, but make it very profitable for our investors.
Great. Thanks. Well, we're happy to host you.
Yeah.
And thank you for taking the time. And to everybody else who joined, we really appreciate you being here.
Yeah.
If you have any questions for Rocket Dollar, myself, Brendan, or our colleague Tristan, just give us a call. Our office hours are Monday through Friday, 9 to 6 Central Time. And we're available.
Sounds great.
Have a great day.
Brandon, I appreciate it. And thank you guys so much. And I appreciate the opportunity.